So, to all of our traders around the world and people that may be watching the video, we have earnings season coming July 15th. One thing the market has not seen for a long time is when companies come out and give a warning and guide the quarters down. That is what's going to happen. Yes, I am showing a chart of where we are currently and with the recession talk, and we will see a lot of companies that will come out. They are not going to be upbeat about the economy with the recession, high inflation, and everything, all the dirty stuff that goes along with it, my friends. And I'm going to walk you through the earnings season. This is a special update. Google is one that's going to report. And the real big ones that have even sold down can still go lower, and there could still be big problems in the tech. But just to say this, we have a chart right now that has a great consolidation on the S&P. I just showed the Dow. But with the earnings season, warning season coming, and stocks guide down, yes, a lot of news is already priced in. So I would say that two-thirds of the news and the PE ratios and the high inflation and people laying off the workforce and the laundry list is long. So we're going to have to navigate through it together, and we will. We've been through other recessions. GDP back to back 2 quarters is what qualifies a recession, whether it's mild or not, and with the Fed raising the rates that they are, and they're not going to stop. So the economy right now, everything that we buy or spend or do anything is eating away at the consumer. Okay, yeah, money. All right. So far, the consumer has held up fairly decent. That's 70% of the economy, people like us, okay, and how we spend money. And so there is going to be a lot of volatility in July, okay? And I'm just showing where that S&P is. What a great, nice little consolidation. It never broke down yet, but volume has been light. And if I show you that, I'm sorry, that S&P is the same consolidation. That was the gap. They filled it, like I said, but nonetheless, the volatility with corporate earnings now can bad news become good news. We've seen that before where the quarter's no good and stocks can go up. We've seen that, but that was how bull markets work. We can have these bear market rallies and we look to buy them all. And some of the larger cap, they're laying off their workforce. You take a look at something like Facebook. Zuckerberg just came out. He's extremely concerned about the economy. He's lost half of his net worth value with his stock falling. That is a chart of Facebook, call it Meta. But here, Tesla, Elon Musk, very worried about this economy. So if they're laying off 10% of their workforces, we always see that when we get into this. It's a technical recession, but it feels like one very much so to me because of all the high prices. That's how I can classify that, because we're paying out big money. So we're going to have a lot of companies like that. Microsoft. Microsoft already came out a month ago and gave a warning to their quarter. They're guiding down, and they are. And the initial reaction wasn't real big, but during the reporting session, it can get very, very ugly. And recessions cause earnings to go down. I'm just showing a great chart right here for you right now on NOW, Service Now. Okay, these are the large cap stocks that stand to get mutilated. Now, if you own them, you must be careful. So you're going to have the biggest volatility with the earnings season. Look at that NASDAQ composite. Look at that long-term consolidation. It came right back down and tested it. And look at the light volume we've had. Okay, there wasn't no real commitment. The first half of the year is over, and everybody thinks the second half is going to be good. And I will teach you how to trade a recession market. Bear markets can make a lot of money, and that's what we're here to do. But earning season warning, I'm telling you, they're coming. You never know when that headline's going to hit, and when those headlines hit on the big cap tech, that's going to create a lot of volatility, and I'm just being upfront. And that NASDAQ composite, right there, that is it hasn't broke down, but look, we could rally up, but every rally has been a sell rally, and it's been that way. Now that the first half of the year is out of the way, with that recessionary talk, layoffs are coming. Corporate earnings are going to go lower. They're going to go down. The PE ratio, what is that E all about? And what multiple should stocks be priced for a big rally off of the bottoms? We're going to take the earnings season warning. We are going to capitalize on all of it. We know how to buy those dips, and we know how to work it. And we hope that you will join us, and it's going to be very high risk for the next couple of weeks. Starting on Monday will be the 5th of July, and then we start really coming out on the 15th. So that's about a 10-day leeway for companies or this market to get bombarded, okay? But the market is down considerably for 6 months, period. And at what point do we get to that big rally, bear market rally? Bear markets can have big rallies. Don't be fooled. That's what we're here to do. Special update on this very day so that you know that there's going to be bigger volatility because we don't know what's going to hit this market, and we don't know which ones are going to do the warning. We do have a site called earningswhispers.com, and we go there. We use earningswhispers.com. Back in the day, it was a really big thing, and now it's going to become big again. And, you have rallies in stocks, short-term trading. You don't take the profits, you're not getting paid. So all the fears and all the laundry list and all the pessimistic and all the negativity can do what? Create the dip buying opportunity.